Hi everyone, my name is Piterpakulski. Today we'll continue creating financial model of a store from scratch, and today we'll be talking about financing that is needed to start the business. If you find this video valuable, you may give us a like, you may subscribe our channel, so you may order a financial model from scratch for your unique business idea. And let's start talking about financing. We can't talk about financing without a cash flow statement. First, we have to build a cash flow statement, and using it, we'll be calculating the needed amount of money to start our investment project. So the main rule is that the cash balance at the end of the period, so the last line of cash flow statement, must be positive or equal to zero. If it is negative like this means that we don't have enough money to start the business. This means that we have a cash gap, and we may use equity or loan to make these numbers become positive. So how we can do that? So we just go to, for example, the first way of calculating the amount of financing is manual. So we just go through the timeline of cash flow statement. We take equity and take the opposite sign of this value. So we may also, for example, look a little bit forward and to see the maximum value here. So here, for example, we have 506,1168. So we can just type it here. So we can see that we don't have negative values in this line, and have negative values in this. Means our business, start our business, we need this amount of financing. We can go
at the end of a month. We can create a total for this line.
We will create a table. Our financing will consist of equity, loan, this line and this line. We will take totals from here. So for example, we may use a little bit more difficult situation when we will have a loan. For example, we can take a loan This will be the interest rate, this will be the term of the loan. We will take it in May. And in addition to May, we will just go here and manually place the amount of financing that we need, additional financing from our pocket, for example. I will take this value with the opposite sign. So this is the 0. This means that we don't need any additional financing. So we take this total, have these values, they go here.
And now we see total financing needed to start our business idea.
But we can also automate the amount of financing that we need. For example, we can adjust the loan manually here, but we can calculate the amount of equity automatic. How we can do that? I will create a table. So what I will do, I will take the result from operating activity plus result from investing activity plus loan minus principal payments minus interest payments. Then I will create a cumulative formula.
And now I will find the minimum value in this line. Then we just press enter. Then I will just
go in the first month in our projections. I will take this value with the opposite sign. Here is the minus. Then we press enter. And now we can see here is 0. This means that we don't have a cashback during all of our timeline. And this means that we found the accurate amount of financing that we need. For example, if we take a loan, for example, $100,000 instead of $500,000, the amount of financing will change automatically. If we avoid the loan, we just so we can easily create different scenarios and see how the amount of financing will change if we create this scenario, if we create different stress tests for our financial model. So Microsoft Excel gives a huge variety of instruments to calculate accurately the amount of money that you need to start the business. And usually when entrepreneurs create financial models, they start adjusting the data, they start adjusting the inputs, because they want to see what are the inputs value to bring them this or that payback period, what are the inputs values to bring them this or that payback period, is these values realistic or not, and they start creating lots and lots of scenarios. And if you create an automatic algorithm for calculation of financing, it will be very easy for you to quickly see the amount of money you need. You won't have to manually type equity, then you will adjust loan for avoiding negative values in the last line of cash flow statement and cash balance at the end of the period. So the better way is to create the formulas like I've shown you just the moment. This will save you lots of time, and I hope you find this video valuable for you. You may subscribe our channel, share this video with your friends. Also, you can order a financial model for your unique business idea. We can help you with it. So see you next videos. Thank you and bye.